Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through how the market has shaped up and what are the cues to watch out for tomorrow's trading session. Well, the Nifty, was flip-flopping between the red and the green, and it managed to shut shop in the red. In fact, very range-bound trade coming in since yesterday. 25,000 are the levels that we have managed to hold on to as far as Nifty is concerned, but 2591 is where we end the day for Nifty in the red. Nifty Bank also turned absolutely flat. It turned into the red zone, trading down almost 0.4%. 56,579 is when Nifty Bank also shut shop. So very range-bound trade coming in Nifty Banks also. In fact, the entire banking pack saw a bit of a profit booking coming in, especially the PSU Bank pack that saw cuts of 0.5% coming in. Since the announcement on Friday of the rate cut, the banks and the realty sector saw a run-up, and therefore after that we are seeing a bit of a profit booking coming in on both the sectors, whether it is the PSU banking name or Nifty Realty, that was a top sector loser that traded with cuts of 1%. But on the gaining side, we had Nifty IT. That was holding on to the gains since get-go. More than 1.5% gains coming in on Nifty IT, Persistent, Emphasis, LTI Mindtree, Coforge, Tech M, all trading with gains of 2+%. In fact, on the Nifty, it was all these tech names that was really pulling up the index. But besides that, we also had the quick commerce names like Zomato and Swiggy that were in focus today, that were trading with cuts of almost 2% on the back of the fact that Rapido is now going to enter the food delivery business, and on the back of that increased competition, these two counters were also in focus today. A couple of other names to mention there, that were in focus today. We also had Jindal Saw that was doing very well in trade. Street has given a big thumbs up to Jindal Saw on the back of its capex plan in the Middle East, a strong, healthy order book of almost 11,300 crores, and a debt reduction and a guidance of 19 to 20% EBITDA margin versus a reported EBITDA of 6.5% for FY25. So these are a couple of names that were in focus today. Besides that, Kanishka, take us through what are the other names that made the headlines in today's trading session, and what was the news flow?
That's right. Lots of stocks in focus today. Now, Tata Motors, that also gained around 2%, buoyed by its renewed market strategy across the EV and passenger vehicle segments. Grasim Industries, that was also in focus, saw a surge of nearly 4%, supported by a bullish note by Morgan Stanley. While United Spirits, on the other hand, that was also in focus. It edged higher by over 1%. This was amid reports that a potential stake sale in IPL franchisee RCB could be coming in from the parent Diageo. But on the other hand, pharma stocks were also in focus after IPM growth for May came in at the lowest level in 7 quarters, weighing on the sentiment across the sector. On the macro front, we had a key regulatory meeting which is underway to review the state of the economy. But with that, on that note, let's take a look at what the markets are going to be like tomorrow. For that, let's welcome our guest Vikas Jain, head of research at Reliance Securities, to understand the construct of the market. Now, welcome to the show, Vikas. Thank you so much for joining us. Now, the benchmarks have ended on a flat note today. So what's your overall technical assessment of the Nifty 50 and Sensex now? Could we see a positive trend for the rest of the week, given the recent uptrend that we saw in the past few sessions, or are there signs of consolidation that we are watching for?
In continuation with the last week's view, as we discussed that interest rate sensitive sectors could take a lead with respect to credit policy. So we have been hired near to the Nifty closing near to those 25,100 mark, and Nifty scaling near to 57,000 levels. So we expect some amount of consolidation in terms of it. And now Bank Nifty could see some amount of profit booking or retracement back to near to 55,500, 55,600. So 1,200 point corrective action could set in. But some sector rotation could take place in with IT sector and IT Pharma, Nifty Pharma could see outperformance. So look at Nifty Pharma is showing some amounts of sign and breakout above the 200-day average. So that sector would continue to remain in focus. IT sector has also witnessed some amount of recovery. So Nifty could remain flat, and we could expect some amount of corrective action into the Bank Nifty names.
All right. Coming with Vikas, hi, this is Ankita also joining in. Vikas, tell us, like you mentioned, some bit of a correction coming in the banking names. Well, we did see that happening, especially the PSU banking names. But tell us, what are your top picks? I mean, in this market, would you give a bullish call, and then therefore, what would be your long positions?
So as we discussed that some sector rotation could happen, so we will have to select Mankind Pharma. The stock is just included in the F&O basket, and we saw some amount of corrective action from the higher part of the range. So the stock has completed its 7-month corrective action from the highs of around 2850, 2900 what it achieved. It has bounced back from its huge support area. So we'll have to go long in Mankind Pharma with a stop of 2250 and a target of 2650. And the second short we would like to recommend is Tata Power. The whole power space sector is being doing strong amount of traction. Tata Power has closed at multi-months high, that is almost 4 to 5 months high in today's trade, with strong price action suggesting into the F&O space. So Tata Power can be bought for a target of around 445 and a stop loss of 395.
All right. Thank you so much, Vikas, for that view and helping us with your top recommendations at this hour. Now, let's go across to Srishti, who's standing by. Now, Srishti, are there any specific stocks that you have found, that where you're seeing breakout patterns?
Well, yes, we have got two counters on the breakout side. Firstly, let's have a look at Ramco Cement, because this particular counter was seen to be hitting its 52-week high in today's trading session. And not just that, what was interesting to see is actually the pattern, because the stock managed to claw back to the highs of 2025, surpassing its previous highs that were seen back in the month of December 2024. And along with that, the stock is now continuously seen to be taking its support of its 20-day moving average, continuing its uptrend, and it's the second straight day of strong gains coming in for Ramco Cement, very well supported by a long build-up as well. So this is the first stock that we wish to highlight on the breakout side. Moving on to the next one from the IT pack, it's HCL Tech on the charts, because yes, the stock has seen its fair bit of a downfall, along with that the whole IT fall. And what was interesting to see is that the stock is now trying to make a comeback. It was seen to be taking a support of its 20-day moving average. You can also see that the moving average line is trending higher, and in the past so many weeks the stock is seen to be consolidating in quite a tight range, and herein we do see quite a falling trend line breakout happening for HCL Tech, taking support exactly at its 20-day moving average as well. So these are the two stocks we wish to highlight on the breakout side. Back to you.
All right, Srishti, thank you so much for joining us for the breakout stocks for the day. But let's move on. Above normal monsoon will aid the rural economy. That's the word coming in from the wise Punitha Kumar Sinha, Managing Partner, Pacific Paradigm Advisors. She also shared her top picks from across the sectors. Let's go across and listen into what she had to say about it.
The monsoons are good, which will help the rural economy. The trade talks are sort of not looking that harsh for India at the moment. The RBI rate cuts now mean that, potentially, since the stance is now neutral, that there may not be any further cuts or further liquidity injections for the remainder of the year. The momentum is there right now. People are taking a relook at markets given the RBI cut. So for the moment, things seem to be fairly stable, and macro conditions are benign. Some of the NBFCs could start looking better. And that's where I would still say there's more room, because the financial sector has started to perform, but over the last couple of years, it's been an underperformer. I would focus still a little bit more on quality and defensives. And I think FMCG could, with the better monsoon, could see some pickup as well. Defense, of course, and then capex by the government. I'm not sure how much. The GST collections have been good, etc., but I don't know how much more capex is going to come from the government. But I think private sector capex might pick up.
All right, then those are the top picks of Punitha Kumar. But with that, let's slip into a very short break on this edition of Your Trades. We'll be right back with more news and updates on the other side, so stay tuned.
Where we're taking you through how the markets shaped up and what could you expect in the week. Let's talk about the derivatives diary. In that case, let's talk about for the expiry 10th June. What do we see happening? The active calls, the first call writing level is 25,200. The second level that we are seeing the call writing happening in is at 25,150 levels. Now, as far as the active puts are concerned, the first level is at 25,100 and the next level is 2,500. As far as the put writing is concerned. So, as far as, the support is concerned, 25,000 forms a strong support for the Nifty. So, these are the levels to watch out for as far as 10th January expiry is concerned. So, that's how the derivative diary is shaping up to be.
All right, those are the levels to watch as far as derivatives are concerned. But moving on, Jindal SAW is investing $118 million in UAE and Saudi Arabia for their expansion plans in pipe manufacturing. Ashesha is joining us now with all the details.
Jindal SAW is soaring in trade today on the back of those capex plans that the company has announced, totaling to 1,000 crores. Now, this is divided into three parts. The first and most important one is the company that they will be incorporating in Abu Dhabi, UAE. This will entail an investment of about $105 million, which translates to about 900 crore rupees. They say that this is for setting up 3 lakh tons per annum seamless steel plant in Abu Dhabi, and this will be done over a period of next 12 to 36 months. Let's also talk about the other two elements of these capex plans that the company has announced, which totals to about 100 crores. One is a joint venture with Buhur Investments, about $10 million investment, 85 odd crores, and the other is for ductile iron pipes. This is again a joint venture where the company will be having 51% equity stake, and the investment here will be about $10 million. Let's also talk about their healthy order book position. Currently, their order book stands at about 11,300 crores, which translates to 0.54 times of their total sales for FY26 as estimated by brokerage houses, and nearly 23% of their total revenue comes in from export orders. So export outlook continues to remain very important for the company, and now that the company is also expanding into overseas markets. Let's also talk about a couple of other aspects for the company. Remember, the company has been focusing on reducing their debt, and consequently interest costs has also come down. So debt has come down from about 3,820 crores at the end of third quarter to about 2,900 crores at the end of the fourth quarter, and consequently interest expense has also come down to about 140 odd crores. So company's focus on deleveraging and reducing their interest costs has clearly come down over the last few quarters. Let's also talk about their guidance that they have given for FY26. Remember, it reported EBITDA margins at 16.5% for FY25, but they've guided for margins to be in the range of 19 to 20% for FY26. So the outlook on margins continues to remain very strong. Now, there are several other triggers which the company is very positive about. One is the Jal Jeevan mission, which the company believes will aid volumes for the company. But before that, they're also looking to expand their capacity. So ductile iron pipe capacity is likely to increase to 100 KT by FY26, and seamless pipe capacity to increase to about 450 KT by the end of this fiscal. As I was mentioning, Jal Jeevan mission orders are likely to intensify for the rest of the year. Capex and global market continue to remain very supportive, because of which volumes could see an uptick in this financial year, and the management outlook also continues to remain positive. So the management has said that water, oil and gas volumes are expected to pick up from the second quarter of FY26. So for today, the company has announced capex plans worth 1,000 crores, because of which the stock is gaining in trade. But remember, management outlook and guidance for FY26 also continues to remain very positive.
All right, so that's Jindal's on the back of that big thumbs up that the street gave it after its capex plans. But there are a couple of other names that were in focus today, like Grasim, there was Tata Motors, Z, Tata Power that were in focus today. But why exactly were they in focus? Let me get on board my colleague Rabinder, who's standing by with the details of the stocks and news. Over to you, Rabinder.
Well, as on back of brokerage news, Grasim industry is in focus, and Morgan Stanley has come out with a note on Grasim industry, and they have upgraded the stock to overweight from equal weight and high target price rupees 3,500. Morgan Stanley says that the Grasim is the top pick in the coverage, and company has multiple opportunity in the play. They say paint business has fared better than they expected since launch. Apart from this, Tata Motors is also in focus, where companies analysts meet key takeaways is coming in, where Nuvama has maintained their reduced rating with target price of rupees 670, and they say that the muted demand outlook and increasing marketing and sales promotion spend would lead to a muted 3% EBITDA CAGR over FY25 to 27. And Motilal Oswal has also given a neutral call with target price of rupees 690. Apart from this, Zee Entertainment is also in focus, where company has entered into a strategic partnership with content startup Bullet to launch India's first microdrama app. Moving to next, Tata Power is also in focus, where Tata Power solar manufacturing arm TP Solar Limited has crossed 4 gigawatt of solar module production at its Tamil Nadu facility. And lastly, IT stock is also in focus, where Kotak Security has come out with a note on IT sector, where they say that the demand has been steady since last result declaration, and adoption of AI is increasing at an accelerated pace, and GCC growth is driven by greenfield setups. They say that the risk reward in the sector is balanced, and the top key piece in the IT sector is Infosys, Tech Mahindra and Coforge.
All right, thank you, Rabinder, for getting us that list of all the stocks that were buzzing in trade today. But shifting focus now and speaking about the most talked about geopolitical issue right now, rare earth magnets. Now, Peter Maguire, CEO of AustraliaTrading.com, says that countries like India and others will now become very aggressive on processing now that China has implemented curbs. Let's listen in.
Tit for tat, strategy was to implement all of these issues as far as rare earths and the supply of them. And we all understand that America needs these, from weaponry all the way through to it's running its own administration, and they're a critical part as far as, key building blocks for their defence industries. So I'm not sure whether it'll be all solved over the next 24 hours. When you control the market so significantly, 90%, then that changes, I think, the framework as far as who is in charge. And this is where many countries, this will be a wake-up call. And I would think over the next decade, countries certainly like India and, powerhouses across Asia are going to be very, aggressive in their own processing as far as these minerals. You've only got to look at the likes of Lynas and other rare earths that are doing it offshore. They were doing that in Malaysia.
Right, moving on then, the foreign investors have stayed bullish on India for a third straight month, with the net FII inflows hitting more than $1.7 billion in the month of May. Telecom, capital goods and BFSI saw the biggest inflows, while pharma and power faced the sharpest exits. Despite a dip in overall FII shareholding to 16%, equity assets under custody rose. My colleague Varun Dubey joins in with the details of this JM Financial report. Let's take a look.
Well, so the month of May is the third consecutive month where FIIs have been a buyers in the Indian markets. Now, JM Financial has come out with a report wherein they say that in the month of May, FIIs have bought to the tune of $1.7 billion and DIIs have bought to the tune of $7.9 billion. Now, the sectors in which FIIs have been buying in the month of May, the first stands telecom sector, wherein the net buying is $964 million. In capital goods, the net buying by FIIs stood at around $623 million. BFSI was the third one, wherein the net buying stood at around $470 million. And then it was oil and gas. The sectors which, witnessed the highest outflows, the first among them was pharma sector, where the overall outflows was around $206 million. Then it was power, where the overall outflows was $292 million, followed by IT, consumer durables, realty and services. In fact, it was consumer durables, realty and pharma. These three sectors have seen the overall selling by FIIs intensifying when compared to the month of April. And also, there are some sectors wherein in the month of April, FIIs were actually net sellers, but they have now turned into net buyers in this sector. The first among them is capital goods, wherein the overall buying is $623 million. Other than that, it is autos, metals and oil and gas, wherein FIIs have actually turned net buyers in the month of May. The sectors in which FII hold the highest holding, the first among them is BFSI, wherein the overall holding now stands at around 31.7% when compared to 31.9% in the month of April. And also it is IT, wherein the overall FII holding stands at around 0.2%. FI holding in the overall Indian equity market stand at around 16% in the month of May versus 16.5% in the month of April, and also the FI equity asset under custody that has grown by around 3.4% in the month of May. So the month of May, in fact, the last 3 months have been good when it comes to FI buying in Indian markets, because this is the third consecutive month, the month of May, wherein FIs have bought in Indian markets.
All right, thank you, Varun, for getting us all the key highlights of fund flows in the month of May. But shifting focus to the pharma sector then, the Indian pharma market saw slowest growth in past 7 months at 7.2% in May. This was largely driven by prices and new products. Now, therapies like cardiac, anti-infectives, respiratory and other outperformed, while gastro, anti-diabetic, derma lagged. Now, Srishti is getting us all the key highlights there.
Well, yes, once again, we have seen a sluggish growth trend when it comes to the domestic pharma companies, because for the month of May, IPM has recorded a growth of 7.2% on a YY basis when it comes to May 2025 sales data. But that's driven by the price and the new products. We'll talk about that. But the key to note is that this growth number of 7.2% is the slowest growth in the past 7 months as well, and it's been 19 consecutive months where we have seen IPM growing less than 10% as well. In the month of May, the company did experience a price hike of 5%, and the new products growth was seen at 2.2% on a YY basis, while a very sluggish and a subdued volume growth what the company witnessed in the month gone by, which was absolutely flat rather. But let's also highlight some of the key therapies that did well. So therapies like cardiac, anti-infectives, respiratory, they were the one which actually surpassed the industry growth. And along with that, some of the therapies like gastro, anti-diabetic, derma, gynec, they were actually languishing in trade. And in that as well, we have seen companies which did surpass the growth number of the IPM, that is 7.2%, wherein companies like Sun Pharma, Dr. Reddy's, Torrent Pharma, even IPCA, they were actually growing well ahead of the industry growth trend at 11%. But on the flip side, companies like Zydus, Alembic and Ajanta, they were seen to be languishing behind. But amidst that, one of the other key trends that was picking up was the sales in Mounjaro, that is the GLP-1 opportunity. That has seemed to be picking up pace. It's almost a 13 crore sale what this particular drug itself that has recorded, and it's a substantial jump from the April as well as the data that was seen just same month a year back. And along with that, it's almost a double the sales on a month-on-month basis. And lastly, Nomura has come out with a note. They're saying that the growth rate in the month was actually in line what the recent past has been suggesting and what they were anticipating as well. But they think that the growth of the branded generics is impacted by the market share gains by trade generics and the private label medicines as well. So those were the key takeaways from May IPM data.
Time to wind down on this edition of Your Trades. Kanishka and I will take your leave. Thank you so much for tuning in.
When the state